Hey, good morning. Let's go over today's trade plan. So heading into the open, we're going to be using 39 to 41 as the micro bull bear zone. And holding at the zone doesn't necessarily mean that the market is very strong, but it would indicate a lack of weakness in the market, or at least a continued lack of weakness in the market. And from 39 to 41, we could see a move back up towards 45 to 47. That's essentially the overnight balance. And then if we can break out above 45 to 47, we can quite easily test the previous VPOC at 2050 and then the initial resistance zone at 52.5 to 54. So that would be the primary upside objective on the day time frame in the event that the market can hold at 39 to 41. 52.5 to 54 would be the main upside objective, as well as the prior VPOC at 50. And then once ES approaches 52.5 to 54, then that's where we'll have to gauge how strong the market really is. And as long as we're not seeing any big disconnect between the S&P and the market internals, the advanced decline, then from there, there is still potential for ES to go even higher, up to 56.5 to 58.5, which is a pretty decent area of resistance at this point. And once we do make our way back up, keep in mind that the S&P would be short-term exhausted, heading up to 54 and 56.5 to 58.5. So that could be an area where we do get some struggle, and the market can balance from there. On the downside, a break and hold below 39 to 41 would bring the open gap at 2030 into play, and the 26.5 to 29 initial support zone. And that's an area where responsive buyers can still be active. And again, in the event that we get a directional move to the downside, the market would also be short-term exhausted, heading into 26.5 to 29. So in the event that we continue heading lower, the 30 open gap and the 26.5 to 29 area can be used as a downside target. And at the same time, that's an area that can also result in a short-term bounce. It doesn't mean that the market has to reverse from there, although it can. But at the very minimum, if the market is exhausted heading into the initial support zone, which it would be, then you can expect a tradable bounce, and at the very minimum, you'd want to take profit at that area. And then below it, 18 to 21 is the overall bigger picture bull bear zone, essentially the breakout area from earlier, and the bottom of the current big picture balance. So 18 to 21 is an area where the selling could shut off, buyers can step in and actually reverse the S&P. But short term, heading into the open, this 39 to 41 area is very key. And if we hold above here, then we're likely setting up for a move back up to 2050 and 52.5 to 54. So you have to be careful here on the short side, because so far buyers have been active at 39 to 41. So those are the main thoughts heading into the open. There are no economic reports, any scheduled reports due this morning. The Greece debt talks are really in play, and if there's any development on that end, then of course there can still be some directional movement. But aside from that, there really isn't any economic catalyst that can really push the market big one way or the other. And that's another reason to be careful at 39 to 41, because again, if buyers step in here and continue defending it, then most likely we are heading back up to the prior VPOC of 2050 and 52.5 to 54. So those are our main ideas heading into the open. Let's see if the buyers can defend the 39 to 41 area, which will help us adjust the bias on the day, and we'll take it from there.